If your retirement plan for 2026 still relies on the same old stock and bond playbook, you might be taking more risk than you realize. Inflation, debt, global uncertainty, all of these things have changed the landscape, but most portfolios have not changed. That is why more investors are taking a look at alternatives like gold, silver, and crypto, not to be speculative, but to protect what they've already built. Today, we're going to break down these asset classes and see how they actually fit into your retirement plan.
All right, Tony, we're back. How you doing, man?
Good, man. Good.
What's new and exciting? Saw some Girl Scout cookie flyers this morning.
Yeah, it is. 'Tis the season, and my 6-year-old daughter is involved in Girl Scouts. Right. And somehow we got wrapped into, not saying we, my wife got wrapped in, and she will be the ultimate cookie sorter. So I was told be prepared to have hundreds and hundreds of boxes of cookies in my house for distribution.
Sounds about right.
The distribution center is my house, I guess. So wish me luck, man.
Yeah,
that's what's new on mine, on my side of the world.
Looks like I'll be buying some Girl Scout cookies. That's exciting.
Absolutely. They're going to be in the break room. Yeah. There will be a hard sell around the office. Yeah. And, hey, you know what? If anyone listening is interested in Girl Scout cookies, you know how to get in touch with me. All right. Tony at swpconnect.com for your Girl Scout cookie needs.
Always be closing out there. I love it.
Hey, that was unplanned. Hey, thanks, D.
No problem.
You know, I might win a trip or something from the Girl Scouts because of this. This is fantastic. Thank you. All right. All right. Today we are talking about, D, I know you've gotten a lot of these kind of questions, and so have I, about gold, silver, crypto, things that are, just have gone, I'll call it parabolic in the last year and a half. So it's on everyone's radar, but for different reasons. So we're going to kind of just break down everything first, and then we're going to come back at the end of this and kind of package it up to give you our thoughts. What are we doing for our clients? What kind of advice are we giving our clients that want exposure? Do we, Strategic Wealth Partners, do we have exposure? Why and why not? And go from there. So I'm going to start off by, why traditional portfolios are being questioned. So right now, there's always been a heavy dependence on equities and bonds, and sometimes people would sprinkle in, they'll sprinkle in their commodities and things like that through maybe ETFs, things like that. But now we have a rising government debt and persistent inflation pressures, because our debt is spiraling out of control here in the United States. Interest rates uncertainty and global instability. We constantly see global instability.
Yep,
don't know what global issue is going to pop up next. And then investors are now just looking outside the traditional financial system, not because they want to get risky, but they want to continue to diversify. And that's the key that, modern portfolio theory says, is that the more you diversify, the less volatility your portfolio should take. Because if you own something that's going down, usually there's something in your portfolio that's going up, right? To help counteract this stuff, right? So you're not just in one lane. So that is why we would do it. Dee, tell us what 2026, like gold. Let's talk about gold really quick.
Yeah, it's I think we'll kind of get into our comments at the end, but traditionally, and this is probably something we'll talk about at the end. What does gold do well? It's the stuff that you always hear about, right? So it's kind of just a long-term place to kind of park your cash and keep up with inflation, right? That's what they always say. Gold is a great inflation hedge. And also gold, if there's down markets, instability, whatever the case is, it's a flight to safety asset historically as well. So that's why it's traditionally been used. The cons on gold, obviously you get no income. So, if you have
You're telling me it doesn't pay a dividend?
No,
no
okay. Dividend on
Just
the
checking.
gold. That gold brick that you bought from Costco is not
paying.
brick. Yep. Incidentally, I think we mentioned.
Are they still selling
I haven't
bricks?
seen them lately,
Okay,
but you know, we talked about it when it was, I think, about $2,200-$2,400 for an ounce.
Yeah.
So no income, and traditionally, you know, no explosive growth, right?
Until the last like 12 to 18 months.
Yep, for sure. And you know, and it's been a portfolio stabilizer, right? So when we talk about modern portfolio theory, that's kind of the steady Eddie traditionally.
Right. For silver, you know, does it have the same purpose as gold? So it has a dual role. You know, it's monetary, but it's also industrial. It actually has purpose. Gold has minimal purpose other than, you know, jewelry and putting grills in your teeth. But I'll go through all that, but I'm being more sarcastic. But it, you know, but silver is monetary, industrial, technology, energy, manufacturing. It has a multi, you know, facet to in today's world in general. Pros, again, does it have more upside than gold because it is more purposeful, is what I'll use, the word I'll use. And can it outperform inflation and grow and growth cycles? That could be actually a really good thing I'm going to hit on later. Cons, higher volatility, and not a sleep well at night asset to own because of the volatility.
Yep. And
I'll just kind of have a precursor is that, like, the reason it's so volatile is because if it's used for manufacturing technology, if we go through a slow cycle, you know, like a recession, depression, whatever you want to call it, guess what? We're not using silver to do anything. We're not building. We're not making things. Like that's the downside. And then how does it fit? Tactical positioning and complements gold, rather than replaces it.
Yep. So, you know, crypto, you know, I thought we'd throw crypto in here because, like we talked about at the top, it's a different asset class. I think, you know, over the course of the show, honestly, we've kind of seen how crypto has advanced, is kind of evolved, right? So more institutional participation. Obviously, there was a big topic during the election cycle. So Trump, you know, was very pro crypto. There's more regulatory framework and infrastructure. You know, again, I'd say infrastructure isn't necessarily good in the crypto space, but that's for the end here. The main use for it is a hedge against like real money is the easier way to say, you know, fiat currency.
Right.
So, you know, that is really the goal, is that eventually that you could use crypto instead of having a centralized government currency.
Right. And then to use it, you know, like there's supposedly a limited amount. You just can't make more Bitcoin, right? There's whoever invented it, who's still under the behind the curtain somewhere, right, is saying, hey, there's only X amount of coins. You can't make more coins.
Yep.
That's the real reason, where a dollar, the US dollar, we can just print more.
Right.
Unfortunately.
Yep.
Right. So, all right, comparing all three, what each role really looks like. So gold, again, stability, preservation, crisis hedge, inflation hedge. Silver, growth linked volatility. You know, so again, if the economy is growing, people need silver for construction and materials, things like that. Also an inflation industrial exposure. And crypto, innovation exposure and long-term vision as a alternative asset, I guess, like currency, like we just talked about. So the key insight thing is that they're all complementary to each other. They're not competing against each other. Mm-hmm. You know, if you're going to get into it, it doesn't hurt to own not just to jump in one. You're like, hey, you know what? I don't want to do gold and silver. I'm just going to do crypto.
Right.
If you're going to do it, I mean, it is wise, just based on modern portfolio theory, to own all three, because they are, you know, non-correlated asset classes to stocks and bonds.
Yep.
All right. Really quick, you know, the allocation mindset, the mistake most investors make. So the one mistake is going all in, be like, man, I can't see anything better than gold or silver right now. I'm going to push in, right? And so that's interesting. Chasing headlines. This is why I get phone calls. Hey, I read this and I read that. And, you know, and there's nothing wrong with those articles. They have some legs, but I'm most social media stuff to me is just headlines to create eyeballs to read. You know, it comes up with a fantastic headline like every week for our podcast, right? So, just people just chasing to listen to what we have to say. And then confusing diversification with speculation. So is it a speculative asset or is it a diversification asset? And saying, oh man, I'm like the world's coming to an end and our dollar's crashing, and so I'm just going to load up on gold and silver. What could go wrong?
Right.
Better approach is smaller intentional allocation. Like let's dip our toe into it because maybe we're buying high. Have you seen how much gold and silver has gone up in the last 18 months? Same thing with crypto. I know crypto's been a little flat lately, but it's down like 20 or 30% from its all-time high. And if this is the next thing to replace the dollar, well, why wouldn't you own some?
Yeah.
Right. I'm not pushing it, but if that's your mentality,
exactly.
Right. Rebalance regularly. If this stuff starts, if you've owned gold for over a year, man, it doesn't hurt to take some chips off the table.
Yes.
That's what that means. And then aligned with the time horizon and risk tolerance. Again, owning the amount that you can handle, because if crypto goes to zero and you put it all in, you're going to be broke. So what's the allocation so you don't go broke? And then one last thing on retirement planning. D, what do you got there?
Yeah, man, I think we can just kind of take this into our comments, but just real quick, we talk a lot about this pretty much every week, especially as you're getting closer to retirement. Number one goal of the retirement plan is to not run out of money. So keeping what you built, obviously very important. But kind of measuring what you need as a growth number is a very important thing. So we talk about that a lot in, the planning shows that we do. And, these assets aren't meant to be like an all-in type of thing. I think that is the mentality that you see a lot with all these articles, and then you generate that buzz, right? And then some, celebrities get involved, right? That's kind of the NFT / crypto pathway.
Right.
But now you're kind of seeing the same type of hype built up for gold and silver.
Right. And, as we kind of put a bow on this and start getting into like some of our thoughts, I'll start it off by saying, what is an appropriate allocation? And coming from, somebody in our line of work, it's like a 2 to 5% slug.
Right.
Per alternative is what we'll call these, right? Going 10% each, I mean, that's a large allocation on something that has been kind of speculative. So like think about like gold, for example. In 2011, it was $1,700 an ounce.
Yep.
Okay. 9 years later, it was the same price. And it actually had a dip there, went from 1,711. In 2015, it went down to 1,000, went back up to 1,700 a decade later from the beginning. So it's been flat. It's supposed to be an inflationary hedge. I don't know if we had deflation in that period of time, right? I'm pretty sure we didn't.
Nope.
But then it's been 2004 has been the bull run, where we're up over almost 130 to 150% on gold. That is where when people ask like, should I get in now? And I'm like, have you seen the curve? It's curve. It's parabolic, man. Yep. Like, do you want to jump on something that's up 100% when it historically has been flat or on pace with inflation?
Yep.
That it doesn't correlate with what it has done historically. Now I can back up and say, well, past performance doesn't, indicate future performance, right? We can say that, but man, dude, I have a hard time jumping on a parabolic curve on the upside. If you've seen the backside of most parabolic curves, they're coming back down as fast as they've gone up.
Yep, for sure.
So that's my general take. And I can say that for all three of these, right? All three of these have basically gone down this same path.
Yep. So it's interesting kind of as we go through this kind of the list and the pros and the cons. Would you still let's take them one at a time. Gold, would you still put gold as we sit here today, kind of what we talked about, long-term, store of value, hedge against inflation, kind of slow growth type of performance. Would you still put gold in that type of bucket when it's $4,600 an ounce?
No.
Silver's up 26% ish year to date.
Year to date.
It's January 14th.
We're not even halfway through the month. I mean, somebody asked me early in the year for gold, and I'm like, man, have you seen it go? And then it ran up another 30%, and I'm like, man, dude, I don't know what to tell you. Like it's uncharacteristic of I think in investing, the old sayings, slow and steady wins the race.
Yeah, for sure.
The jackrabbit type of response in investing is called gambling.
Right.
Right. But when you take a look at gold, like gold really doesn't have a lot of purpose. It's primarily used for jewelry and investments. And there is some spots for it in aerospace and equipment coating. Same thing with electronics, dentistry. Again, fillings and grills if you're into that stuff. Silver's got a lot more purpose. Electronics, solar panels, used in the auto industry quite a bit. Medical field quite a bit, and also art and jewelry there. But I've also had people saying, "I want to be invested in gold," and I'm like, "Okay, how?" How do you want to do it? I got ideas. What are your thoughts? Well, I want to buy some bars. I'm like, okay, cool. Where are you going to put them? Because if somebody robs you, they're gone.
Yep.
Right? But then I can also argue saying, hey, I'm buying gold as a calamity hedge.
Right.
It might be awesome to have physical gold because I might need to trade it for a pig or a chicken, right? If the power goes off. And at that point, maybe you just need more bullets than anything else. Who knows? I don't want to talk that way, but reality says. But the other thing is that, all right, so if I own it digitally and the power goes off, it's worthless.
Yep.
But at that point, if the power goes off, we're all kind of we're all in a bad situation.
Yeah. Like, are you trading gold for, food?
Exactly.
In a
pigs,
global
chickens,
breakdown?
grains.
Like,
what
I
am I
don't
doing
think
here?
Gold has much value.
The old barter system. So but it probably doesn't hurt to have some gold on hand. But better make sure you store it somewhere where no one else knows where it is, and ain't gonna melt in a fire. It's not gonna get stolen. Out of sight, out of mind, and just know that you got it somewhere.
Yep.
Right. Same thing with silver, but silver is less value than gold. You need probably like 4 times more gold or silver to equal an ounce of gold, right? Like the comparison on the values, exponentially different.
Yep.
And I'm trying to think, man, it's like actually 6. That's 6 times. Like 6 ounces of silver equals 1 ounce of gold. Because it's like 70. Isn't silver like $70?
No,
$700 an ounce. $700 an ounce. I'm thinking. So the way I look at this is that SLV is the ETF to own silver in your portfolio.
Yep.
GLD is the ETF. Well, GLD is like $4.25 an ounce, and then silver or it's per share.
Right.
You add a 0, and that's how much the ounce is. I'm making an assumption that silver SLV works the same way. So is silver $700 an ounce? I didn't look that up higher too, but I'm trying to make a correlation of you need a lot more silver to equal gold in volume if you're going to own it physically.
Yeah, I'm pretty sure the price per ounce of silver is the price on that ticker. I think it's
really?
$90 bucks an ounce right around now.
Okay. Cool. Again, the biggest thing, and then you talk about crypto. All right, how do you want to own it? We can own it through an ETF, or we can buy a thumb drive and slap it on there.
Right.
Again, same thing. You have a physical asset if you do the latter.
Right.
I got to go buy a thumb drive. I got to go buy it on Coinbase, go put it on a ledger, and then put it in a safe deposit box, hope it doesn't melt.
Right.
I don't lose the code. I don't lose that, I mean, those
16
NFT
key.
Yeah, it's crazy. It's crazy. So, what are your thoughts, Dave?
So yeah, I think, it's I can admit when I'm wrong. I've definitely been wrong on silver specifically. And that's really just because I've watched silver just move down and sideways basically my whole life.
Yeah.
It was the start of the chart I saw was 2013. It was 33.79 an ounce, and then at the start of 2024, it was 24.09 at the start of 24, and now it's 91.73.
I mean, if gold or silver had like a 20% year, like everybody would be like, wow, what an asset class that is this year, because it doesn't move parabolic like a 30% in 15 days. It doesn't do that historically.
Right. That's why it's concerning.
Exactly. That's why we don't own it. And actually we owned gold for a long time. And there was a point, I don't know, I want to say like somewhere around the 3,000 an ounce is kind of when we exited, and it went up another 50%. Like we're not perfect, but we made a lot of money on gold, and we said, man, it shouldn't be up this high. It's in the stratosphere now. It's like now it's hanging out with the moon in outer space somewhere. Like it is way off the charts historically.
That's why it's hard to give advice on.
Correct.
It's very difficult to give advice. It is one thing, if you're just sending stuff out there into the internet. It's an entirely different thing when you're talking to a client, right? Who's depending on you and your expertise and the firm's expertise. I cannot imagine silver not being a wild ride in 2026. I can't imagine it not, but it's up freaking 26%.
Yeah,
year
and you
to
know
date
what? I think
in 14 days.
I think the year over year is like 178 or something, or like 180%. Gold's like 120 or 30 or something along them lines. And that's the thing, man. Somebody asked me like, "Hey, what do you think of gold? Like, should I get in?" And I'm like, I can't get it. I can't get it right because it doesn't make a lot of sense. But if you just believe that the dollar is going to continue to go down and crash, and inflation is going to continue to go up and rise, I mean, there's a case there.
Inflation isn't going up though.
It's flat.
Yeah,
it's flat 3%, right? It's not. It's going up, but it's not accelerating.
Right. It's decelerating, and in that environment, typically people would be selling their gold.
Right. And then if we have an economic downturn, silver's going to take it on the chin.
Yeah, for sure.
But that could be 1 to 5 years from now.
Yep.
And then crypto, man. Again, when they can figure out how to use it on an easy, for a normal person to use it on an easy basis, then we can talk.
Yep.
Until then, I don't know.
Yep, I agree.
So,
yeah, I'd say to put a bow on the conversation here, it's something we're going to be watching, obviously, very closely this year. But everyone I talk to inside the business seems a little scared of it. I'd say specifically silver too. But hey, it's a supply and demand economy, and there's a lot more people wanting to buy gold and silver right now than sell it, and that's what happens.
So my theme, and this is what I'm doing personally. This is not financial advice. But I have increased my exposure to crypto because of the dollar and things like that. But it's more of watching people gamble. And I look at where gold and silver are right now, and crypto has not kept up. It has been flat for several months, right around that $90 range. And I think it just started popping in the last week. It's up 5% or something. And it was up to what, 125?
Yep.
Ish, plus or minus. I do feel that like it's people are going to look for the new shiny object and like, oh yeah, hey guys, remember Bitcoin? Remember that? Remember that? I'm old enough to remember Bitcoin, that it used to perform well. Like, people are going to look for something that hasn't kept up with everything else going up. So me personally, I've added some exposure to crypto, just letting the full disclosure, but not a much. Again, I'm keeping it real. I'm not
Yeah.
going all in on it by any means, but just increasing it. So
Yeah, I've been doing kind of what I've been saying for a while, just like the monthly buy on crypto.
okay,
Dollar cost averaging.
you've been doing that for a while.
For a while, yeah.
Oh, that's
for
good.
like the last year and a half, I'd say.
Oh,
So
you must be rich then.
No, I'm not. But it's something that's why I kind of compared it last week, the gold and silver to crypto, because it's not behaving normally, so it's very difficult to predict the future. But what I would say is that if there's any type of economic downturn, any type of slowdown, I would say silver is going to react negatively to that at the current prices, and I would say gold would probably hold steady more than the silver.
So here I have a question for you on this one. So the typical inner year correction is somewhere around 12%. Is the average top to bottom kind of correction in a normal market. In a midterm year like this year, that number increases to 16. We probably will not start seeing volatility, or we're predicting not to see much volatility until April-ish, right? Just that's when the election stuff's going to start kicking off and get ready for all those fun commercials and stuff on TV. But if and when we see an inner year correction, does silver and gold participate on the downside? Your thoughts?
I would think so. I mean, that's just kind of how it's been going lately. When the markets were volatile last year and going down, crypto was usually volatile and going down. It's not behaving as it normally does. So even though we would be entering into a period of economic correction, especially with the midterms, I think people would want to probably start taking some profits from the gold and the silver and maybe buying back more traditional stuff at lower prices. That's kind of what I would be doing in that situation.
I mean, history tells me, and just watching stuff, is that as things go up on a parabolic curve like gold and silver has, when things get rocky, like the Trump tariff board day, right? The market was down 8, and then he showed that board and went down another 8 to 10. Like things that were inflated, like a lot of the AI AI mega tech, like they went down more than the market was down 18. They went down more. There's a lot more air to be sucked out of things that have gone up parabolically.
I agree.
That's what I'm saying.
Yep.
Now, because they are such a different asset class, I could be wrong.
Yep.
I'm going to say I'm about 80% correct, but there's definitely a thing where it's like, man, maybe they just hold their ground because, again, everyone's scared of stocks. What can happen to gold and silver? Let's hop on. It's going to be interesting to see what happens with that. Sure. But it's hard to recommend it now because of where the journey it's been on in the last 12 months for both of those.
Yep, for sure.
All right, man.
All right. Well, hey, thanks for listening. This was a good topic, something we'll be revisiting, I'm sure, through the year.
Yeah, let's see if our scorecard's good or bad.
Yeah, exactly. It's usually impeccable, so we just don't like to brag.
Impeccably bad.
So, thanks for listening. If you guys have any questions, comments, ideas for the show, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.